Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I just wanted to go over the Bitcoin chart, the current pump that we're having, which we did predict. We did use several models developed here at Alpha in order to try to let you know that we could be approaching these levels, and then also giving you some confidence that we might continue, and also some, negation zones where we might get rejected and where we might get invalidated on those concepts. Just to start out, let's go ahead and take a look just pretty briefly at the stock market, because of course the health of the stock market does determine the health of the crypto market. Crypto is more volatile than stocks, and so if the stock market has having problems, then crypto is probably going to have problems down the line. What you can see is that we are just kind of retesting that trend line on the volatility index for stocks. So, we may have a little bit more volatility, today than we thought, or yesterday than we thought we might have, just in how we've been plummeting down. But ultimately, we are in this zone that I marked off in advance. Even while we were falling here, I had this zone kind of marked out. And I did suggest that we would consolidate in that zone a little bit if we were going to continue falling. And hopefully we get into this low volatility region, which would be great for stocks and it would be great for crypto. And what we've been seeing on stocks as this volatility has been falling, once we broke down from these levels that I had marked out here for quite some time, and we've been following that extreme volatility that just sent crypto plunging. But lower volatility is good, and so we've been rising as this volatility has been dropping, as have stocks. And as you can see, stocks have been pumping. Now they're meeting a little bit of resistance at these trend lines that I had marked out. It's like magic. We just came right up to them, right? Of course, we're just going to meet a little bit of resistance. We're going to have some pullbacks in these regions. We do still have our good support. We don't have the support that we really want, but we are in these support regions that are fairly healthy. So we are recovering from the bear market, and we're just into correction territory now. These numbers are looking pretty good, but we still want to see them up here on these higher levels, kind of taking out these highs. We still are in the downtrend levels for the bigger picture, and we just want to get back into these higher areas. So S&P looking pretty good there. I'll come back to the dollar in a second. But you can see we are getting these pullbacks on all of these different indices, and these different stocks just as we rise. So we have to just make sure that we don't fall back down, because this could have been just a fake out relief rally, and maybe overall the market is still bearish, and so there could be a lot of investors, professional investors, who are going to dump on these guys' heads, because a lot of the retail might come in and say, "Oh, look how much stocks have crashed, so I'm going to buy it, right? I'm going to buy it. It's a good value. I'm going to buy it for my retirement. I want in." And then, the professional traders who lost a lot of money in like these type of huge dips, they were kind of caught on, unexpected. Some of them were bullish that we would catch, some of these diagonal supports, and we just didn't. We just didn't. And so we broke down, and now they might be getting ready to dump on these guys' heads, or eventually, right? So we're not really sure yet. You can see like some of the riskier stocks coming back and testing their trend line. We don't know if this is going to break down. The Russell 2000 is often a good indicator for how things might go in crypto. But overall, we are at least having some positive momentum. And I would just point out again that it's not like it's nothing amazing. Okay, we really want to recapture these higher levels, and if we're getting rejected from these mid levels, even on the Russell and some of these others getting rejected, in these higher mid levels, then recovery might take many months. It might take even a year or whatever. So we could have a very slow market for a while. That's just how much time I wanted to spend on stocks. And is crypto going to trade more bullishly than stocks? I'm not sure. I'm not sure. Just we don't really have a lot of evidence of that. But moving along to Bitcoin, because Bitcoin is leading the pack, you can see that we do have this type of a bullish appearance on Bitcoin. And just briefly, I did want to touch on the dollar. The dollar is starting to climb back up. Bitcoin has, a bullish pattern that is kind of the opposite of this shape, right? But it sort of was making that shape. Here, let me show you what I'm talking about, right? This kind of bowl, right? Right here, where it's kind of pointed up. It made that shape while the dollar was conducting, this type of, downturn, right? So the dollar, it didn't really make a double top, but it made a lower high, and then it retraced a couple times. But it is now recovering and it looks fairly bullish. So we're going to have to see whether or not this thing just breaks down or if it's going to keep pumping, because it could break down like this. And if it keeps pumping, that would suppress Bitcoin a little bit. It is under this trend that I've marked out. And so I don't know. Could we see a huge spike like this? It all depends on current affairs in the world. All I know is that right now we are at this kind of rejection point. And so there's a good chance that we could continue to break down, at least to this zone, to this support. And if we do, that would be very good for Bitcoin. And if we keep pumping, then that could just, it could just slow Bitcoin down a little bit. It doesn't always suppress Bitcoin, but it does slow it down, okay? Because of course, a lot of Americans and a lot of people use dollars for their, buying their tether and buying, their coins. So it's important. Just keep an eye on that. But what we do see is that Bitcoin is continuing to threaten to make these upward moves, which is something that we've been pointing out here. And we are moving along fairly well in this mid channel that I had marked out. And this is my own theory of the origin lines of Bitcoin. No one else is using these that I'm aware of. I've developed it on my own, out of my own imagination. Other people are using origin line concepts developed from way back in the days of the miners controlling Bitcoin and the, those type of like, black market industries. Not when everything was very shady and nothing was very utility based. So what I've done is I've tried to make a new model, which will sit on top of the old model. But I think the old model just it's outdated. Okay, so basically you can see that Bitcoin is moving along in these channels, and this is the origin line that I'm using. So I'll just refer to this as my model, my origin line model. And what you can see is that we've kind of got like this wave pattern going on here. And we're using a mid channel, and we're using a center channel. And, what are we going to do next, right? So we skirted the bottom here. We hit only the middle. We basically bounced off the midline, retested this mid channel, and have broken down, but not all the way, which suggests to me that we're going to retest the midline. We did something very similar back here, where we got to the top of the channel, but we broke down, went to the midline, broke down, and then retested the midline. See that? Very similar. The only difference is we didn't have a blow off top. And of course, we're probably going to have less blow off tops as we go along. And if we don't have it, then we're probably going to be testing the mid channel, right? So you can see right here is basically the equivalent of right here. And instead of a blow off top, we just had like extra time going sideways, okay? And time is equivalent to height and depth in charting. So if you have a correction, then it doesn't matter if you're just slow and steady to the sideways or if you dramatically drop, or pump, whatever. So what we're looking at here is basically a high probability of a retest of the mid channel of the midline of my theory of the origin lines of Bitcoin. And I'll show you the standard, origin lines theory, but this is, I think, going forward, this is what industry will be using, and that the model that I'm creating is probably the new standard. It's just extremely logical, and the other ones that other people are using, it's not. It's not. What they're doing is not logical. Um, you can very easily see these great movements in the channels that I've marked here. You can understand what they're doing when they break down, when they retest, right? Retest, breakdown, right? You can understand very clearly how they're bouncing on these mid channels, right? Very, very clear. Look, even right here, that second peak. High resistance right here on this mid channel. This is like a secondary channel, but look how it used it. Just climbed on the secondary channel, climbed on the secondary channel, used the midline, used the midline. This is so extremely logical. You could basically plan your macro trades off of it, okay? And again, look, if we didn't come down to the mid channel, you can pretty much just assume that you're doing a retest. Well, we didn't break down to the mid channel, right? So what can you assume? We're doing a retest. Well, that would be one assumption, but there's also the concept of a macro correction, which we have to take into account. And so that's when we come to this area right here, which broke down very sharply after its little retest, right? So in this case, we had a retest of the mid channel, the midline, just like what it looks like we're doing here, which would be mid 50,000s. And then what happened? We broke down, re-grabbed this middle area, and basically smashed down, okay? Where would we smash down to if we followed this same model? We would smash down to the low 20s with the possibility of support in this 35. Actually, we could, we're up here, so I have to use this number right here just in case we suddenly dropped. But anywhere between 31 to 35, well, to 38 if we move forward in time significantly. But and if we just suddenly fell all the way to the bottom would be around 18,000. And then, kind of this slow movement would be 25,000. So I think this would take time. So I think 25,000 is on the table. And then potentially, we could have already seen the bottom because 35,000 would be along that midline if we did come here and then went back up on our way. But the point is, you just have these general figures in your mind, and you also have the concept of where we could potentially pump to. And right now, we're just in no man's land. If you look at my model, and it's been highly successful if you backtest, it's highly successful in visualizing how Bitcoin is moving. We're just in the middle of nowhere right now. So either we're coming down to this mid channel, which is going to be a retest of 33,000, right? Somewhere between 31 to 33,000, or we're going to be coming up to basically 55,000, okay? And then we can reevaluate once we get there because we're going to find out if we build support or if we start to break down. So it'll be pretty easy to call after that. But, it does look like, just based on history, and I've already shown you how, we just are missing the blow off top here. And instead of a blow off top, we used time, right? So basically instead of a blow off top, we use time to go this way. And then we had our relief rally, which is this one. And so we had this, and then we had this, right? And this is kind of out of order, but we had this one also. It was just right here, right? And then we broke down. And now we're getting into that zone where we can either retest or we're really going to just break down to this midline and, potentially kill over. How would I measure that? Using using these tar pits over here, right? These Gaussian channels. And we're not red yet, we're still, chugging along, still chugging along. And so nothing really is, too shocking about what we're doing. We're just kind of hanging out very slowly in this middle area. And if we can pump, if we can get this line to kind of be a little bit more diagonal with this line above our head, if we can get into this 55K area, we do have the potential to keep these lines green. But more likely we're gonna just test the mid channel, get rejected, because it's kind of hard to break out, right? Get rejected, and then come back down and chop down if we don't just get rejected right here. And so the next week is going to be very important. What would it look like if we broke down? Well, if I took a fractal of this movement, it would look something like this, which would suggest a total breakdown in May. All right. And then you wouldn't want to come. Then you would want to come back to the market sometime in June to July to buy. If this does work out like that. I'm not necessarily ready to call that's what's going to happen. We haven't had a retest of this midline, and we haven't had a total breakdown yet. So one of those two things has to happen in this mid channel. And so I'm just watching very closely. And if we do get into this area, I'm going to be fairly bullish. If we get into this area, I'm going to be pretty bearish, right? So be on the watch out for that. I would definitely say, we are getting into, very high risk areas. And, if we look at the origin lines that other people are using, let me turn off these other things, get rid of these drawings. Then you could see that most likely we wouldn't break below this number, right? I mean, this trend line right here, which would be 34,000. And, that potentially we are at support right here. Which, is confluent with some other thoughts that I have. Again, like just because you develop a new concept for how we can move for the range that is possible for Bitcoin, it doesn't mean that these old lines don't matter anymore. And you can see that these both look very supportive at the bottom here. It's very interesting how they both can work. But again, you can break down on this one to that mid channel exactly the same in both concepts. They're confluent with this region with a potential to break down to at least 35,000, if not somewhere around 25,000, right? So both models have the possibility to break down. And just 28,000 I think would be probably the reasonable expectation on the old origin line concept. And with these new origin line concepts, it just would be somewhere, 20,000 is the bottom approximately. And the one thing about the old origin lines is that you had to keep adding lines. Like this was the origin line, and then oh no, we broke down because of COVID. So here's the new origin line, and the wick went kind of below the support. So and you don't really know where the support is. Like this diagonal isn't really correct. So what's your actual range, right? Well, on the one that I've developed, it's pretty clear. It's pretty clear. And then you have a couple ranges down here also, right? I just didn't draw them out because they're not that relevant, right? We're up here. It's not relevant to draw out these things right now. And, of course you can, stick your toe down in there, right? This old model of the origin line, which is really this one right here. So I can just actually make this one kind of dotted. It's just where we wicked to. The old model just has this line. And look, there's nothing that you can figure out from this really, right? There's nothing that you can figure out from it. You don't know what to expect, and you wouldn't have known that you would break down here. There's no information. You can't really use this. This is just like a line of hopium that people are trying to grab onto. But it's very clear that we can break down from it. It's very clear we can break down from it. Even in the correction, like after the correction, even before we massively pumped, right? So this was all cool. Like we broke down from it. So this, and back here, we broke down from it. So people using this origin line, I think they're missing something. I think they're missing that this new era is different from this old era, and that we really do need a new model for how Bitcoin can move. And the Gaussian channels and the fractals do suggest that we could go as low as 20, right? But the 25 is more realistic, and that 30 is quite possible to be supported, in this area, right? So again, like it's very possible that we just go to 30 and skim up, and because we are making these softer kind of waves over time, right? And maybe if we do fall, it's not going to be that harsh. Maybe it's just going to be like 33,000 or whatever, 35,000. Who knows? Who knows, right? Even if we have another crash, after pumping up to like 55, we could just come up here and then come back down here, right? Something like this. And that would basically just be the $35,000 region. It might not be as traumatic as people are thinking. But of course, we want to be realist, and so we understand this is also a possibility, around here, around 20,000, 25 to 20,000. Uh, some things that would suggest that we do have the possibility to pump. I've been, kind of tracking different indicators and trying to figure out where they suggest that we might pump on a macro level. And what I figured out is that we have had some buy signals recently that are very similar to the buy signals over here, very similar to the buy signals over here. And just one kind of warning is that we also had buy signals here, and we did get massive pumps. We did get massive pumps. Right. This one actually should be to the side. It's just we're on the 5-day right now, so it can't line up perfectly. But and again, this one also. This should be somewhere over there. There's just too many lines to align. But basically, they indicated that we had these pumps, but there was no warning of the dump. And so what I'm concerned about is if we do repeat that fractal, if we do repeat that fractal, where is my fractal? Okay, I may have deleted it. If we do repeat that fractal, then it's possible that we're just not going to get a warning on it. And that was kind of indicated by these other indicators that I've been using. I actually made this set of indicators myself, or put them together to use in combination. And what it suggested is just a very questionable buy-in. It actually had a very questionable buy-in right here, whereas we had a very solid indication of buying in here, very solid indication of buying in here. Right here, it told me, yeah, go ahead and buy, but it just wasn't 100% sure, like using all of the metrics. And what that suggests to me is that it is calling this era the same way it called all of these eras, and that we do have the potential to pump, but that we might also have the potential to crash down. So it's just weird that this one wasn't that confident, and that we have that kind of confluence with this area, which had some issues before a massive dump. So definitely there was a chance to make profit in this area, and we could have, but we're still within this range. We're now using that type of golden zone as support. You can see right here, right? We bounced off of it, broke down. Right here, we bounced on top of it, using it as support, and are now bouncing up. Potentially, that means we have the capability to come up all the way up here to like 45, 46,000. And you can see we're reaching a little bit of resistance right now, so I think a lot of people are shorting. But if the market stays bullish, then according to Crown's Crypto Cave, they think that we could get short squeezed up. I'm not so informed about all the leverage trading and how those things, the mechanics of those things work. But I would suggest that we're going to be pumping up as well, just by other metrics. And we do have this wedge. So for me, I think actually, 44,500 is where I'm going to be wary. Going to be a little bit wary there. I do think we can squeeze more out of this. And just around 44,500, I'm going to be a little bit concerned. So I definitely think these are take profit zones, right? This was right here. And then this one is also going to be a take profit zone. We did have a mid channel area here, so, take profit zone. And I don't recommend necessarily buying in this region if you haven't got in and you're hearing a lot of bullish stuff. I just recommend like playing it by ear, because we could have a big pullback. You can see, look how much time, right? If you just think about the amount of time before we had pullbacks, like there could be a pullback coming up, right? You don't know. So you don't really want to be buying in right now. And then we have this golden zone that I've marked off here on a golden diagonal, which is kind of similar to the golden horizontal, which I think this is like one of these master areas, just like this is kind of a master area. Getting on top of this diagonal was super important in the past, and it'll be super important again in the future. So just like getting on top of this golden zone area, right? Getting on top of this was super important. So will be getting on top of, and using as stability this kind of golden diagonal area up here. And we can do that within the next couple days. We can do that within the next week. It's possible. And if we do, that will be a very bullish sign for me. Again, this is my target. I'm looking for that 46,000. Kind of use this area as support, like break through it, use it as support, retest it, whatever, and then potentially bullishly move on to the mid 50,000s. This is the path that I marked out when we were down here of how I predicted we would go, and we are on that trail. So let's hope we keep going. Let's see here. In terms of our local support, nothing too interesting. You can see right? Why is this? There we go. Nothing too interesting. Still, still moving along right there, right? Perfectly fine. And, if we have a few wicks lower or we come back to retest this and have a couple wicks lower, that's no big deal. We're just in a resistant zone up here. So expect some choppiness coming up in the next couple days. Could just be a little bit choppy. But again, some brilliant minds are thinking we might have the possibility for a short squeeze. So don't be over bearish. Just don't be too bullish. Be on alert. We had these kind of anti-origin lines, and we've just been walking up them. Look at this. You guys know I marked off this region like over here, right? And just look how well, they've been predicting, where we're going to hit, on these different lines. We're just walking up between these different diagonals. The one thing that I would point out on this is that we did have a very heavy resistance zone, this one right here. Okay. We are reaching that very heavy one, which how these were developed matters, but we are reaching that kind of resistance zone in these anti-origin lines. So there could be some type of pullback as we interact with this area or some type of slowdown. But generally speaking, it looks like to me that we have a high likelihood of breaking through this, to be honest. This doesn't look like the usual kind of turnaround behavior for Bitcoin in terms of its structure. We are on these radials that I've pointed out, and we're getting into those vertical ones. So the more vertical we get, the easier it is to like just fall down also through them. So just be aware that we could start having some interesting pumps or some interesting dumps coming up. And let's see here. This is the channel that we wanted to get into. Again, my target is here. And you can see a bit clearer why. Because that's going to be above the midline of the channel above us. So we are now fully broken out into this region, which, sorry, I had log on, which, is an area where we've been rejected from multiple times, right? We're fully into that area. We're fully at the top of that area. And you can see we did get accepted here, but we fell back down. Right? The only time we were really fully invited in was up here when the market was super bullish. Everyone was FOMOing in, and then we made all-time highs. After that, it was just, rejection, 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 rejection. Didn't even get close. Rejection, rejection. We had a rejection here, but then we got accepted, a little bit more accepted, and look where we're getting rejected right now, right? Look where we're getting rejected right now. Almost, oh yeah, precisely to the dollar. Look at that, precisely to the dollar we were rejected. You guys know I drew these out a long time ago, So that's just astonishing that we hit right there. And look at this, how we're testing, right? Just right on that line, where we got rejected here, right on that line. These diagonals really matter. But it's really cool that we're building up this support. We're not just popping up here like a rocket ship and then like crashing down. We're building up little layers of support as we move up. And that gives me a lot of confidence that we could potentially break through here as high as like 46,000. And probably break down and retest before we got into this region solidly. And then we're sitting on top of that midline. I don't care if we rocket ship up under it. I want us to be sitting on top of the mid channel, right? On top of the midline in this mid channel. And yep, that was the path that I outlined. And actually, we went right to it. We went precision to it, right? So let's see. Now, this is the lightning pattern that was developed back here using a fractal of the previous movement. And I don't believe in this model. I'm just showing you how it could be possible where we broke down, right? We broke down in this type of configuration. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Bam, down. And then we've had these kind of like major chops. 1, 2, 3, 4. 1, 2, 3, 4. And then what happened after that? Smacked down big time, right? Along this area, similar to the analogy of this one, smacked down big time and we capitulated. So if you do find, that this is kind of a risky area for you, a lot of resistance to have to break through, and a high chance of being smacked all the way down, then, you may want to adjust your risk accordingly. But I don't believe in this model, and I'll have to see it to believe it. I'll have to see us breaking down all of these layers up here first. And one of the key differences, which is probably the reason why so many people are shorting, why that short squeeze is possible, that short squeeze to pop us up, why it's possible, is probably because a lot of people are thinking about this capitulation. But I want to show you something that probably no one else is really paying attention to. This capitulation never got into this area. It never sat on any of these supports. These all got rejected out of that zone except for this one pump. All of them were rejected from this green zone. I made this green zone for a reason. It matters. It's important. And we are accepted into it right now. Okay? We are accepted into it. And so I'm not feeling like we're going to necessarily capitulate the way that we did in the summer. I don't think we're going to smash down. And everyone who's shorting right now, I think they might end up getting surprised. I mean, maybe we do have some pullbacks, but I think we're going to have a little bit more support in this region than they thought. And, who knows? Maybe we come down to like here. I don't know, maybe 39,000. But if we can support, find some type of support in these little layers, even if we do get smacked down, I think we can avoid smacking all the way down to 33, 31,000, whatever, or just breaking this in general. And it could surprise people. We could pop up actually. That's not what I'm calling. I'm not calling for that. I'm just saying we could surprise people. But I wanted to show you this anyway, just in case, so that you can prepare and think for yourself and look at this as an analogy and determine for yourself, what you think. And let's see here. If you do, let me turn off the target. If you've been following my fractals, all of this has played out almost perfectly, except for when Russia attacked the nuclear power station. That's the only thing that screwed it up. But this W formation reversal has been working out perfectly. And I just want to show you something that's really kind of annoying almost. Right? We've got this type of thing going on. And it would suggest some type of pump, right? I mean, you don't have to be too perfect here. So what was that, like 1, 2, 3? Maybe some type of pullback, and then maybe a pump. Okay. Just if you think that this has any validity whatsoever, okay? And I'm not sure that it does. I'm not sure that it does. I'm not making this a call, right? Let's just use white. This isn't a call that I'm making. I'm just saying this is the fractal that's playing out. It's been playing out ever since this midline right here, and then they've basically been opposite of each other. Whereas on a diagonal, you can see this whole chart is moving on a diagonal, and it's wide open here, but it's being compressed as we get into this wedge. And so what you can see is the result of that compression, and it would suggest something like this, right? Wow, it's almost too good. But it would also suggest at the end of the month that we would have something to worry about. So it would also suggest something like this. Okay. And what might that be? I don't know. It could be like this. Try again. Lower high. And then, well, I don't know where it would come back to. It's pointing to the, you see right here? It's pointing to the bottom of this yellow area. But that it's also aligning with this pink area. So let's just say like this. Okay. If you think that this fractal has any merit to it, then potentially we could see something like this also. So this is not a call. Do not trade on fractals. They are just to give you a little extra confidence if something is moving in a certain way. It's for no other reason than that, okay? So let me go ahead and just add these to the fractal. We'll see if they play out or not, or if this thing's just been overstretched, okay? Could just be overstretched, you know? At some point, fractals have to break down, especially reverse fractals. You know, you can't just go backwards in time, you know? It's just extraordinary that it's played out how it has. So I just wanted to show you that. Now here's another fractal, and this is the theory that I'm working off of. So this is the one that I actually trust and that I developed by my own independent thinking, which you can see in another video, the hyper bullish case for Bitcoin and crypto, right? The hyper bullish case for crypto. I think that's what the video is called that I made. And you can see how I developed this. But in essence, it's basically a play off of this in reverse. And what you can see is, yeah, there could be some choppiness here, but then maybe some type of a squeeze, right? I think this could be I think this could be playing out. I think this really could be playing out where we come from this type of zone up here, just some type of consolidation, hard bounce, you know, reverse capitulation basically. Some type of movement here, bounce, a peak, dip. Look at this psychology. It's just so perfect, right? And we're a little bit off. I was a little bit off. Look at this. So if we do smack down here, don't be surprised. Like there's some type of psychology in this market which suggests it is possible. And what would happen here is that we would say that by the end of the month, by March 30th, right? Somewhere between March 30th to the first week of April, there could be a surprise pop up. And so I wanted to show you both type of fractals and different ways of thinking, because you know we could have a capitulation moment just like this, or we could have this fractal, which I believe more strongly in, which is just a change in the behavior, and then taking us to 55, which I've shown you is very confluent with retesting the mid channel of the origin lines that I developed, right? That I developed. And it's important to note that because I don't want, you to think that, this is based on some established theories or somebody else's ideas. Again, it just depends on if I'm not making a mistake, and I might be making a mistake, right? But if you followed my logic so far, then you might consider that this is what's happening. And, if we go ahead and take a look at these channels again, wow, that is super confluent. I didn't even put it on top of this before. That is super confluent. What is this one? Let's get rid of that. Yeah, just amazing. Just amazing. And then my bias would be that we're going to get rejected and break back down. Okay? And that this was a bull trap. That's just my bias. I'm not going to evaluate that until we get up here and we can see if we push through or if we get rejected or what happens. But the fact that I made this model, which can be used to potentially accurately assess the situation, is incredibly important, at least for me and my trading. And I hope it can help some of you if it does end up being valid. Because again, other traders are using they're using this origin line, and I just don't think it predicts what's possible. I think this is just outdated from pre-2018 days. It's still a very important origin line, and you can see we're using it. We're actually using it for the slope of our accumulation here. So super important, super important. I'm not dismissing this, and I'm definitely keeping it on my charts. And I've even expanded on it, right? Other people are just using the line. I have expanded on the likelihood of layers, right? Using complex thinking about where these could break down, right? See this wick? See this? So these are all developed with some price action in mind, so that if we do end up breaking down between this old origin, that I also have these layers to refer to, not just my own. But I am biased to thinking that mine are correct and that this is just outdated and not very useful anymore, except for how support can lean on it when we do cross it. And if you think about it in that way, what if we have a breakdown from here, like I'm suggesting? There might be some support here, right? Because we don't have to throw away everything, right, and replace it with something new. We can build on top of our predecessors, right? And look at this, at 45,000, we might end up finding support again. Let's go ahead and turn this off, turn this off. Go back to our diagonal channels. Oh, that's too delicious. That's too delicious. Right? So if we're on log, it would suggest retesting the top of that channel. But if we're on linear, which I think is how it'll play out, you're going to come in here and maybe wick down to this mid channel. And then potentially you could find support. Oh my gosh, just like right here. Look at this. Look at this. Wick down to this line. Look how confluent that is. Right to that line, right? Yeah, I mean, this is what I think is possible, guys. I really think it's possible, and then we could continue on our way and even potentially make another all-time high. if we don't break down either here or here, okay? And let me clean this up a little bit. I get a little bit excited. Where's that? Turn that stuff off. Just one final thing that I want to show you before we go. Let's see here. Oops. So I did mark off these zones where we tend to break down from. You have to kind of align it just right. Yep, somewhere like that. Where you do see we have these kind of like breakout areas like right here. And look at this. Look at this. Like we're basically right in that area and we're starting to break out. Now, maybe this isn't aligned perfectly, so maybe we could consider something like this, and maybe this is still inside. And so maybe we are gonna like grab the side and just like fall down. Look how confluent that would be, actually. Let me just consider this. Let me just push this in a little bit. That's astonishing how it's just astonishing sometimes, these fractals. Yep, line it here and here. I don't know. This is fairly convincing. Yeah, touch here, touch here. Touch, 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 touch. Touch, touch, touch. This is aligned. Touch, touch, touch. Break down. Break out. Right here, like above, somewhere in the upper, in the upper half, about a third of the way down from the top is where it happens, where the magic happens, and you start a new price action. Look at that. Look at that. I'm just curious, what would Control C, Control V. Well, they don't align perfectly, but I don't think they have to. I think it only matters that they break down or break up, right? If they break up, there could be some type of little zone. And if they break down, there could be some little zone, just depending on the price action. So let's say that this is the zone. Then, wow, dare we think this way? Dare we think this way? 70,000? I don't know. I don't know. But I do think that there is the possibility for a pullback in this area. So, wow, that's confluent with this as well. I didn't mark this out before. Look at that. That is so astonishing. Sorry, not the egg. Look how this fractal also obeys where I would predict we would have pullbacks to. Huh. Yep. So anyway, I'm thinking that we're probably going to have some type of a pullback pretty soon, which could be as soon as, this week. And if we do, well, just watch to see if we break, below like 39,000. And if we can reacquire 41,000, then maybe this model is playing out. If we lose 39,000, then probably the capitulation is playing out. That's what I would say. All right, guys, this has been another long episode, but I really appreciate you sticking with me. That was your alpha for the day. Stay safe and happy trading.